Hey, Dan Passarelli here. Happy Wednesday. Happy Fed Day. And what a great day it was, wasn't it? S&P 500, as measured by SPY, closed up 1.63%. That's up $8.81. Holy moly. As you can see here on this chart, we actually started the day up pretty strong. We kind of leveled off through the morning. And then right about here, when we got the Fed announcement, what happened? Took off to the upside, had a pullback, and back up. A little bit of drama, but really basically what we expected. Now, why did we end up starting the day higher? Well, it's because of the tech stocks, right? Nvidia closed up 12%, Amazon up 2.9%. But the question then became, what's next? And as you can, back to this part of these are 1 minute candles here. We just basically had some volatility, but we just closed a bit higher than where we were in the morning. So what happens next? First of all, from a technical standpoint, we have the slow stochastics, as you can see down here. When we see the fast line, which is the red line, cross through the slow line, which is the purple one, that can be an indication of follow through in the same direction. So that could indicate a little bit of a bullish follow through. Usually I like to see that signal happen on the other side of the 20 line if I'm looking for a potential rebound. And this is above the 20 line. So maybe not as strong of a signal. We also have that all-important 21-day moving average, which we traded above. If we pop through it tomorrow, we could get some follow-through for sure. And if we don't, then it's going to be a battle within this range between the 50-day and the 20-day moving average from a technical standpoint until we break out one way or the other. Now, fundamentally is what's really important here. And now that we've had the Fed announcement, we're going to start the cycle again. We have got regular weekly unemployment tomorrow. And then guess what? Friday is the first Friday of the month. Do you believe it's August already? I don't. Where'd this year go? But that is the monthly unemployment, which is, maybe more important than inflation at this point. Maybe that's an overstatement. I would say equally as important based on the things that Powell and company have been saying. So that's going to be a pretty big and important number that can have some carry through and ripple through the market, especially if it's out of line one way or the other. Now, on top of that, we did see that the likelihood of a 25 basis point rate cut for next Fed announcement stands at 87.5%, with a 12.5% chance of a 50 basis point rate cut. We would have to have some awful employment figures in order for that to happen, I think. But that is what some of the pros are pricing in here via the CME Group's Fed fund rates. And that's folks actually using real money to hedge or place really big bets on that. So we have to take that information into account. There's virtually no chance priced in of rates staying the same. Literally 0% chance priced in. And that's probably pretty conducive with a lot of the things that Powell has said. But you know what? What we've been seeing for really the last 7 months, I guess, is around the beginning of the year when Powell started talking about cutting rates, is we always see more optimism, whatever the Fed says, because I was listening. I was looking at every single soundbite that came through from the press conference, and basically Powell said, we don't know. Yeah, there's a chance we could cut rates, or there's a chance we might not cut rates. It's going to depend on the data. But the market, via the stock market or via the Fed funds rate, kind of took that a little bit rosier than what was the actual tone and demeanor of those comments. So does that set us up for more of a pullback later if data doesn't match up with those rosy expectations? Yes, it does, but we'll have to wait until we see those events play out. And when we can, hopefully this conversation can help you to be nimble and attack as soon as it is warranted. Hope that helps. This is Dan Passarelli, Trade Smart.